Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it.
3, 2, 1. Well, it's been a while. I think it's time to catch up and see how we've been doing. The market has been very interesting and very choppy. Our last trade took us to somewhere around this area. It was toward the end of February, around the 20th. And we're going to catch ourselves up between the 20th of February and right until the end of the month. So it'll be a quarter one update. You can see the trades here, and there were several. And you can also see that generally the market was falling during this period. The trend was definitely down, unfortunately. But you can see we have a mix of trades, some of them positive. We'll just kind of walk some of the interesting ones. I'm just going to remind you that on this charting package, because these are after hour trades, they're going to show up the next day. So for example, this trade happened at the end of the day here, even though it's showing up as the buy position, and it's closing at the end of the day there, which is showing up the next day. And just for reference, you can kind of see those buy and sell entries and exits. A blue line between the two means we made a little money, and a red line means we lost a little money. So the market is basically flat during this period, and what we're doing is we're able to scalp a little trade, a little profit off. So a buy here and a sell there, we're out. The next day, market falls, we're buying, we're selling. We don't capture all of it, but we certainly capture some of it. Next day, we think, maybe the same thing's going to happen, but it doesn't. We buy here, we sell there, and we take a loss. So, the ratios are still looking pretty good for buy to sell. We took a loss in here. We took a little bit of an upswing here. And I probably should draw this a little better. It's really here to there. And then we are taking a buy here, and you can see there was quite a bit of drawdown here, but we ended up exiting at that point, taking a little loss. Not horrible, but we're still taking some losses, but the market is definitely falling here too. Market drops a little the next day. We're trying to, again, hopefully see the market go up, but it doesn't. A little bit of drawdown, and we're back out. So we're definitely taking some losses during this period. This happened to be a pretty bad trade. We were out on this day, went back in on the end of that day, back out here. So just within a couple of days, we're out. But the last three trades for this little section were pretty good. So the market dropped to here, we entered, and we took our exit the next day. And again, that's showing up sort of here because it's after hours trading. The market drops a little bit, we're buying back in and we're exiting, same kind of concept. And this last one, we took a buy position here. We did take some drawdown, just waited patiently till right about there. So we ended up with a little positive return there. So that takes us through. It's funny that this trade actually closed on the end of March, the 31st. So it's perfect. We'll do our recap and end of March. It's currently almost the end of April, but we'll catch up on those trades later because there haven't been a ton of them. But let's head over to our tracking sheet and see how these trades did. Well, it looks like we had about 9 trades since the last time we checked in. Our last trade was the 220 trade you see here. So we're going to pick it up here on the 24th. On the 24th, you may remember that we had a couple of winning trades, and you can see sort of what happened there. And this was all during a period where the market was falling. So this is kind of interesting, and I really enjoy these kinds of trades when the market's falling, but we're eking out some profit. So interesting one would be right here where the market's dropping 1/3%. We're picking up almost 1.3%. Market drops 2.2%. Unfortunately, we're dropping here 1%. That's the trade-off. Here again is another winner where 0.5% versus 1.5%, or taking a little less loss. But at the end of the day, I'm just going to kind of summarize. You can sort of see the different trades and how they're doing. I would say generally the thing to note is that this price is generally falling. So from 687 or 689 to 650, that is a falling market. And in terms of returns, it is definitely reflected in the buy and hold. Starting there at 1.38 and ending up down a little over 4%. That's pretty significant. For us, it looks like we peaked out around the 24th in terms of the most return we saw. But we've basically been holding our own through that falling period. Instead of seeing close to 5 or 6% loss, we're just seeing about 2%. So we're still ahead of the market. As of the end of the quarter, the market is down 4.37 and we are up 6.4. Our infamous beat the market factor, we like to see that greater than 1.5, and right now it's 2.47, so it's doing excellent. Going to turn our attention to sort of some metrics and our 6-year running here. Basically, our expected winning trades is a little lower than expected. We are also in a falling market, so no surprise there. We like to see that around 70. We see it around 53%. 70 comes from roughly an average of the last 6 years of what the winning trades end up being at the end of the year. So we definitely want to see that. The beat the market factor is looking pretty good though. Every dollar we're putting in, we're getting $2.47 versus the S&P, which would be $1 in. It's the profit factor on the S&P. I've also tried to streamline the metrics here. I'm going to really focus on just 3. And the metrics that I'm going to focus on is what is the return this year, what is the drawdown this year, and what is the volatility, and how does that also play into our 6 years worth of data that we've been doing this. So we know the return comparison, -4 versus 6, definitely looking good there. The drawdown's interesting. The drawdown on the S&P has been -6. We've been -5. So even though we're trading a leveraged instrument consciously, part of the reason is we think we can maintain a reasonable drawdown with it. And in terms of volatility, you can see we're much more volatile, but we do have some volatility on the upside too. But our swings can swing pretty big. I mean, we have +2% changes, -2% changes, where the S&P might be doing around 1%. So I think that's kind of interesting. And then where I really think it matters is, so over the course of all the time we've been doing this now, which is about 5.25 years since I've been tracking this for these videos, we can see that the compounded annual growth rate for the S&P 500, 12.91, pretty respectable. We've had some very good returns. Our compound annual growth rate trading is 22, so not 2 times high, but definitely pretty strong. I also will call attention here to the drawdown. During that time, in terms of annual drawdown, the most we saw was -18%. That was back in 2022. You can see that here. It was also the trading's drawdown of -6. So, we are taking less drawdown for more return. And the volatility is basically similar. I'd say, we definitely see a little more volatility on the trading side, but the S&P is volatile too. So what does all that mean? I'll tell you what it means to me. As long as our compound annual growth rate continues to be higher than holding the S&P, we should continue trading. If we can reduce the risk through drawdown, I would say that's a double plus, right? Taking less drawdown and less return, that's usually pretty reasonable. But if we're able to get some excess return, in this case almost 10% excess, that's pretty significant. So going forward, I'm just going to focus on these main metrics of annual growth rate, drawdown, and volatility. I used to track things like Sortino ratios, Sharpe ratios, upside volatility. I feel like that's just noise. I want to know, for something like this, how much risk am I going to take on? The -6 versus the -18. And what's the return? What's the benefit going to be? And you can do that through a ratio, but I think it's even stronger because you could have low returns and low volatility, that's not where you want to be. I think you want to try and, be comfortable with the rate of return for the volatility that you're seeing. And right now, what I see is I've got a premium return for about the same volatility with less drawdown. I think that's a winner. So we're going to keep on with our trading. We've got a couple more in the queue. It is almost the end of April at this point that I'm recording it. So we'll catch up on some trades in our next video. So thanks.
That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.